Hey everybody, what's up? It's Booksy. Today is Friday, November 10th. This is going to be a bit of a different kind of video. My expectations for today are going to be in this video, but I just want to let you know before you start the video, so you're aware, that I'm going to be doing a little bit more of a work through. I had a request that I thought was a pretty good request from one person in our Discord who had asked if I would do videos that explain or rather walk through how I think about things when I'm setting up a range and why I'm getting targets that I'm getting. If you follow along for a while, or you have been following me for a while, a lot of times you know what my thought process is. But if you don't and you haven't been following for a while, you might kind of look at something like this, and while I'm explaining stuff, you may pick it up and you may not. I know a lot of folks, their English is not your first language, and so you're kind of trying to follow along, and you may not understand why I did something or whatever, and what it is I'm actually looking for. So what I want to do is just kind of walk through a little bit of my thought process on all this. I'm going to start with a clean chart. I'm going to kind of like work through it, and I'm going to talk about things that I look for when I'm charting, and we'll see if I come up. A lot of times this is good anyways because I end up coming up with new ideas or whatever before it's all said and done. So sometimes, you get kind of wrapped up in whatever you're doing, and then you end up kind of missing maybe a big picture moment or something like that. Where did it go? That's not good. Why did it go there? Oh, I think it's moving. I think it's in a different, that's why. It's probably because it's in a different area. So what I want to do is just kind of work on that and see if I can give you guys like a kind of a walkthrough of why I think the way I think and what it is I'm looking for and where it's coming from. I think some of it's going to be a bit diverse. You're going to have some Wyckoff stuff in here. You're going to have maybe a little bit of Elliott wave. A lot of times what I'm looking at is sine wave stuff, and I've talked about that quite a bit, that a great deal of my focus is often on what I would call, wave analysis and things like that. So I don't want it to be hidden the way and I guess the manner in which I'm kind of speaking about things. Some of these guys I can't seem to get rid of, so I'm not sure what to do there. Get rid of that. Yeah, let's get rid of these two. And I don't know why, but it's not letting me get rid of. Yeah, something wrong with this chart. I'm just going to move all my stuff down. I'm going to leave the one I have in the middle. I'll just leave that for now, but I don't know what the deal is, but TradingView doesn't want to get rid of my alerts for some reason on this chart. I might need to just kind of reset it. All right, so first of all, when I'm taking stock of like a bigger range, a lot of times what I'll do is I'll go to like the hourly or something, and just kind of remind myself like where we are in the big picture. If it's an older chart, I might have stuff kind of back here that I messed with previously. If it's something I need, I'll keep it. If it's something I don't need, I may not keep it. This is sort of the big picture for me right now, is that we had this big ledge. We kind of created this really long, you can see it's almost like an arc, right? And I think this is basically a four top, like 1, 2, 3, 4, and then it drops. So for the most part, like that's the starting point of the analysis, is what I consider to be like a distributive action. And then what I look for from there is basically like, all right, well, in a waveform, if you break down in a distributive action, right? So you have a wave, and if you break down, you're always kind of breaking down through some support. Because in sine wave analysis, and I've talked about this a bit previously, again, I don't want to be like too long-winded, but there are some things I'll preface so that you can kind of understand where I'm coming from. This is one that I think is really important. We talk about M crosses quite a bit on our channel and in our Discord, and what that is always like a major creek. But these things exist on waves, right? And all an M is just a wave. Okay. And it can come up higher, often in a distributive action. This could happen, or example of an SOS, this could happen where this comes up and then it assumes a higher wave Maybe it doesn't come down but like halfway. We might be in a situation like that right now, hard to say. Or we could just be in a situation where this came up higher, its distribution, it's going to come down and assume a lower wave down here. But regardless, this can also happen kind of on the up and down. And then this happens also as we go down and we start creating bottoms, is that you get a smaller waveform here as well. Same deal before you break out. And this is why when you look at Wyckoff, you always see those M shapes. And when I talk about cat ears and stuff, that's really what I'm talking about. And if you look at the master fractal that I often look at, it's basically just that. Well, it turns out that the way in which ranges tend to set up is they set up in a way that they give you this information early on. So usually as a range creates a top, you'll see that there's some kind of like hooking action right near the end. And this hooking action is really important because it usually signifies two things. So it signifies, number one, the direction that the bulls were going, which is almost always to the next sine wave top. Like almost always. So you'll see like this hooking action, and it almost always indicates like where were the bulls trend, right? Where were they trying to go? Okay. And then the second thing you'll note is that there's almost always like the final bear trend, which is this kind of drop down here. And then you'll find that later, no matter how small those M shapes get, that this is ultimately like where you typically will see that final cross and maybe that final check if there's a spring. That's just basically like a Wyckoff bottom with a spring, right? And this is how it tends to break out. So all of this stuff sets up along sine waves. And then you have much larger sine waves, which are basically like from top to bottom of each wave. So for those, what I'm looking at, and this is more of like within the same sine wave, right? So not looking at a bigger schematic, which is typically what you see like I just showed you. But a bigger sine wave has this, and these are also really important. There's some really important markers here. So one is that if you look at the 50% here to here, and I'm going to make this like a different color, is that oftentimes this 50%, right, and it's not always perfect, and this is kind of the tricky thing, is like this is mathematically solid, but it doesn't always present itself as easy to do because it's hard to get this measurement perfectly because you need to know where to measure from, and sometimes it's not, I hate to say this because it kind of makes it sound like unfair, but it doesn't always appear like super easily, right? So often what I'll do is I'll look at this kind of 50-50 rule, as I call it, because if you see the breakdown and you know where the previous bottom was, usually what you see is that this formed an S-curve across this middle, right? We talk about this all the time. Well, if we can identify kind of where that center is, and then we know where the bottom of the previous wave is, we can do what I think of as like a 50-50, where you look at it crossed 50% of the sine wave. You can draw a loose line. It doesn't have to be perfect, but it can give you an idea of where that next top area might be. And typically, you can do the same on the downside as well. So in this case, if you come up and you were to come across in a sine wave S-curve type pattern, which is usually what we see, not only does this give you a pretty easy way to measure, oh, well, this S-curve is typically a 50% marker, right? I talk about that all the time, like these 50-50 extensions. Well, they are. But not only that, but if you go from the previous top through that middle, it often will indicate the direction that you might be heading if this were to come back down, right? Because that indicates where the next bottom is. This is why a lot of times when I talk about stuff, I get kind of like bummed out, because if I see something where, for example, if this were like setting up really low and it comes up and hits early, this could be an example of one where, just as an example, like this could be an example of one where, well, maybe we didn't check the creek and we came up and you're like, oh yeah, it looks great, right? And even here you might say, well, hey, it doesn't look that bad. It could come right back down and still be within the range. Well, yeah, if this comes up low, that's one thing. But let's say, for example, like this happened, you might say, well, I think it could come back down and this could end up being accumulation. You could just get like a spring bottom and push to the top. But there's other times where, unfortunately, you might see something more like this, where this sets up really high, and you get this really huge push and it comes above the top. And when I see something like that, I'm like, uh-oh, we didn't check anything. And then if it takes a really long time to break down, this is always kind of a bad thing. And this is where you get these like gaps, right? Like there's a gap here or there's a gap here or something. And you're like, well, that's not great because it doesn't look like it ever checked this creek. This could indicate to me that, yeah, it came too high. It went really far up. And now there's a potential that it comes really low. And then you see this as like a breakdown with that cat ear. You can see why it looks like that. And that's that foretop that we're talking about. So when I look at stuff like this, I kind of have to imagine everything's happening in that way. There was a lot of information there that I just shared with you, but the basics of it are pretty simple, which is that every sine wave, it sets up for the next. So when you think about it in those terms, and then you think about it in the terms of a creek, which is, hey, as this is going down, this is creating resistances that are later going to have to be tested. Then you start getting the idea of why the M cross is such a simple, effective way of understanding stock movement, sine wave movement, because it is, and it works really well. It doesn't mean that it's always going to go up just because it crosses a sine wave, right? If this comes above, you might get a little M cross. It might shoot super high up. That could be just like an auto reaction, and then it still could potentially come down lower. And this is where you have to read every range for itself, because the temptation might be here in an instance like this to think that, well, it's going to go back up. It might. It just depends on the way the range sets up. This could also be a halfway point, for a new range, and it's going to be much, much longer. And then this ends up being a 50-50 down, and you end up having like a humongous downward move. And that's the idea of iteration, okay? So I spent about 10 minutes talking about that. I know it's a lot. I think it's really important, though, to understand that, and to understand that these creeks that I talk about are really just resistances, and they adapt as you go. They change a little bit as you go. But ultimately, if, for example, this does form a bottom right here, and it doesn't have like a major S-curve continuation down, what you'll see is that these are the major M crosses that you're going to have to deal with later. And typically, that first push-up, which maybe your automatic reaction, is going to create like the main kind of midway point for your creek, almost always. So midway point for your range, I mean. So almost always the first or the second push-up is going to be kind of like the big M, right? The left half of the big M. The right half is going to be a series of crossing this guy, right? And then maybe making a spring or something like that. And after that point, when you take off, no matter what happens, you're always going to kind of come back. And you can see this looks like a really good range because it looks like a Wyckofian setup. And it just so happens that once you get this idea in your head, you kind of can't escape it. And you can see when something goes wrong. You can see when it's not doing what you expect with an accumulation, for example. So you can look for stuff like preliminary support to help you help indicate, well, that's probably where your auto reaction is going to be. And if you know that, then you kind of have an idea early on in a range of where you might see that auto reaction, where you later might see that SOS. I know this is like way zoomed out. I don't know why I'm doing it like this. You can see it better. And then you might even have an idea, potentially, of where that major creek is going to be. So it looks like I just kind of eyeballed it, but then you start noticing like, well, no, everything that he drew looks kind of right. There are instances where this can get kind of crazy though, right? And we know this on AMC and other stocks that sometimes, for example, after the SOS, you might go into a backup. That backup might go really deep, and it's usually going back to like the middle of the range. And that's a pretty unique situation at sometimes, but not always, where you might get this kind of SOS and it suddenly looks kind of distributive, but it's really just going back to test something that they didn't test, right? Now, all of this being said, that doesn't mean that every time you see a range, it's going to be accumulation. I'm just showing you that the way that I think about sine waves and the way I think about creeks have to do with those markers, and that's pretty much it. A lot of the analysis that I've pulled from that quote-unquote master fractal is just those relationships. And when I talk about stuff, I'm always looking and thinking about those relationships. So it's almost easy, I guess you could say, if you know kind of what to look for with those rules. But it takes some practice, I suppose, as well. So the reason why I often get like really good price targets on the ups and downs is because of that, right? So right now, like when we look at this range, and let's get into the analysis, like I'll just go in and look locally, because locally there's some interesting stuff happening right now. And then we'll zoom out a little bit and we'll look at like the bigger picture. I know a lot of people want to know like, well, what's happening right now? So I will put a little bit of the analysis in there. So we have a top, right? And then we have a creek here. And you can see that, yeah, I mean, basically it's a trend. It's got that same kind of arcing look that the big picture had, right? Unfortunately, we lost the head and shoulder, right, in aftermarket hours, or excuse me, extended hours price action. If you put extended hours on, this looks pretty different, but I'm not going to do that right now. I'm just going to use regular trading hours. So we've got this, and then we've got a series of downward ones. You can see it broke down again. I'm not being really specific right now. I'm being kind of general, but you can see it broke down again with this little M shape, and then it looks like it did it again. So it looks like it's getting smaller and smaller. This could still end in downside because none of these have broken out this way yet, right? None of them have broken out to the upside yet. They've all just kind of rejected and failed. So at this point, we're looking at the outermost point. We're not positive that this is the actual outermost point just yet. It's possible we already hit it over here and this is the first breakout. So you got to kind of keep that in mind. We can zoom way in and see if that makes sense. There is an M shape here with the little hook. You can see it bled down, and now it looks like it's trying to come across. But then if we zoom out a little bit, it's kind of like, well, maybe that wasn't it because this whole thing looks like a giant hook. So this is where, you know, you have to be a little bit patient because you may not see what you want to see right away. This is possibly like the outermost one. Doesn't really matter. It's on the tiniest scales. But yeah, each one of these kind of hooks then drops, right? The first one hooked, dropped really far, 20%. This one came up. You've got this kind of rounded hook action, and then it dropped again. You can see the cat ear type shape with the paw in the first ear and the second ear. So we're looking for something similar to that, but right now it's kind of hard to tell. This is where I might use RSI and say, all right, well, maybe, you know, this is kind of it. It looks like an extension up high. I think that's probably like the final one. I don't know. I don't really see the cat ears, but that's okay. You know, it's really small. For all we know, you know, excuse me, it's not over yet. But at the same time, like, I also know other things are going on. So I don't want to like get too bottled down in like the micro. So we zoom out a little bit, and this is going to give us kind of the better read on the bigger range. I'm on the 15-minute. You can tell that where we are right now, this is where I use like the VRVP, for example. Where we are right now is in center liquidity. This seems to be the desired area to trade right this moment. Makes sense, right? Because we jumped over it earlier, and there was a large liquidity gap here. It has since been filled a little bit already, and you can see that the pressure down is going into this $8 range. So this is where I would use the kind of more basic, if you want to call it that, analysis, where I just look at, all right, well, where is that center? You know, I remember we did have a lot of indication it was right around 8. That does make sense. You can see that when we first came into this range, it kind of whipped around 8 and then came down. This actually looks really similar right here, this little structure, to what we're seeing right now. Pretty familiar looking, right? And if that were the case, then you might expect that there could be some more downside, or that we would be coming into whatever bottom we're going to come into. And after that point, we would maybe come back up. So I'm going to keep that in mind later, because if this ended up being the center liquidity for the range, right, it's possible that we see something really similar to that right here form out. And I do have confirmation based on where this hit, looking backwards, that this was indeed an important area. And it would make sense, right, if you're going to try to kind of bounce up through this liquidity here. So this could end up being really important, the 850 level. As we go forward, it could end up being a range center. So I'm going to keep that in mind. For now, I think it's probably a good estimation, but we don't know for sure. And then what I would do is look at, well, what's the 50-50 around that? Does it make sense? And sure enough, yeah, it makes perfect sense that that could be the range, because the 910 area is roughly where that previous top is, 905 to 910. I think it's actually like 908, something really bizarre, because it hit it in a lot of different ways. But yeah, so right now, like, this to me makes sense as a possible range that's being formed. But it doesn't have to, right? And then I have to look at stuff like this. And if you remember, we just talked about it in the example a minute ago. If you come down and you make this cross now, this is a pretty light area. It doesn't exactly have a lot of space, is what I'm saying. So if I were to start going across right now, I would probably be to the edge of this. And if you look at the range, you know, like, well, I can triangulate it, right? The longest it would potentially spend in this range is through Thursday of next week. So it's a whole week, right? That's the longest it would spend before it has to move outside of this creek. That doesn't mean, right? That doesn't mean that it can't form a larger range. Remember, I said that a lot of times, and I think this is true, a lot of times that auto reaction ends up being a really big tail for the range. And so if our auto reaction ends up coming up, and you can see previously it actually came up higher, but if it ends up coming up here, it's going to give us kind of a different look. So we might use this auto reaction to break out. I mean, we could actually use it to come all the way up and gap fill. You know what I mean? It seems like that would be too high, but you got to remember that auto reaction in a reaccumulation might indicate the place you're going to SOS later. So it's possible that it's high, it's up here. It's possible that it's low, it's down here. We know that if this is the top of the range or near the top of the range, it's probably going to be in this area. So it does look like an auto reaction might come up and try that gap fill. This is where, again, we're going to use kind of alternating creeks. Things get a little bit weird. You kind of have to keep up with it. I don't feel like it's that complicated, but I know that it looks maybe obnoxious. So I might use this guy as a potential, and I might use this guy as a potential. And so what I do here is I look at where did the breakdown happen. So this, in my opinion, is where the main, I would say, liquid trend is. You can see that this is kind of where we've been picking up liquid as we go upward, as we went upward. So if I copy and paste that, you can see that this has basically been like the padding right here. And this is kind of like your buy zone. And then finally it just jumped over it. So this is part of the reason why this was a really effective bull trap, is it went into this buy zone and then it just jumped over it completely. And now it doesn't have to deal with it. So when we come back, we know that no matter what happens, eventually if we come back here, we're going to have to deal with this again later. So this is going to be really important no matter what. But here's what I'm getting at. All right, no matter what happens next, you might come to the outside of this. You might take all the way till here before you see a bigger thing. But I think that your auto reaction is usually going back to test what? Well, preliminary support, right? If you're going down. So in this case, preliminary support isn't exactly very high. Like, it's kind of right around here. And I don't think that, maybe this one, but I don't think it's necessarily unlikely that this comes up and just kind of barely pokes over. No matter what happens, as soon as you get an auto reaction, you're going to then draw, the next creek line or whatever. Okay. So it might see it come up here just above 910 or something. It's hard to say right now. All right. But then at that point, you're looking at a much larger range. So suddenly, like a 1 week schematic turns into like a 2 week, almost 1 month schematic really quickly, right? And the truth is there's not really much you can do about it as a retail trader. And this is why if you're a Wyckofian trader, you might trade the auto reaction or you might trade the spring, but you typically don't trade phase B, because once phase B starts, which is where the range starts, yeah, maybe you have an auto reaction that comes up really high. Maybe it's already happened. Some might argue that was the auto reaction. But once it comes back up, you can still have like a really long, like drawn out range, right? Where you get this kind of later spring, and you know what I mean? Like all of this other stuff could still happen, and it could take all the way through December, right? To really get through this area. Now, that's assuming that it's even an accumulation. This could still be a distribution. This could end up being really narrow. where this rejects and it ends up coming back down and it goes lower. This could be a really harsh reaction that goes up too high. In the case of like a cat ear with a big giant hook, you might see something like this where you get this really long distribution up top that comes really, really high, where there's a lot of selling, and then you sell back down through to get to lower liquidity. And this is why it's kind of difficult to chart it out early and make really strong estimations early based just on what I'm talking about, because you don't really know what's going on with this range yet, if it's even going to hold it. So at this point, my thought is, yeah, I think it's going to hold this range. These are getting really, really narrow to the point where basically it has to go straight down in order to continue down. And I think if it starts breaking out, what you'll see is that almost immediately, as soon as it breaks out, there should be a push to test this outermost creek. It might not come immediately because, again, there's other creeks here that we have to deal with that are even more local, but still, it will head towards that. So this is kind of the outer one right here that I guess we would have to deal with. There's only a local one that is even existing right now, these two exterior points right here. So yeah, even if we break out of these tiny little micro trends, you're going to have to kind of move across these. But once you do, you should see it go all the way up. However long it takes, it should go all the way up to the next one. Okay, and I think that's typically where we see that big auto reaction, is that big jump. All right. And I'm assuming some stuff here. I'm assuming it goes up here, it finds support and goes up. I don't think this range is going to be skipped over. And if we do kind of skip over it right now, then later analysis would have us coming. So let's say we skipped over it and went low first. Later analysis would have us coming up probably back into this area at some point, in the future. I don't think it's going to be completely glossed over multiple times. Okay. So for right now, this is kind of what I look at. And then what I try to do is I try to kind of work that in with everything else that we know, right? So we know that there's two upward trends here. We know that those guys are going to provide resistance. You can just think about it really simply if you want. You don't have to have all these crazy lines if you don't want them. But you could think about, you could think about this as like the resistance right here. And how, like, basically until you get over this kind of shield wall, you're not going to go anywhere. You can see the high amount of liquidity there. Obviously, we traded here for a long time. There's support at 910. There's probably another one up here around 960 something, 970. Support and resistance, right? So this whole area becomes this kind of block zone that you're going to have to deal with. I think that you will find that, yeah, there's probably going to be some trend that's caught later, and it makes perfect sense. It'll match with one of these or something like that, right? So, like, for example, if I wanted to stop the stock from going up too high, as a institutional trader, I might put a sell wall in an area that correlates to both a horizontal top and a diagonal. And that could be something like this, right? Where it's like, oh, it only goes up to like $9. Maybe this does cross, early, and then it takes another breather, comes back down, finds higher support, and then pushes up again, and you end up stopping here, right? Instead of going much higher. And that would be, okay, we're following this, and I can't always predict those things. Usually, again, if they leave like a really large opening, you will come back later, okay? So then there's this kind of idea of like, all right, so we know this is sort of where the range might form out. Some of this stuff, a little bit of guesswork, right? Just thus far, we don't know the information just yet. There's other things we need to know though, like, because if this is a sine wave, then that means that this has already gone through, right, like a wave here. And this is where things get kind of complicated, because you're going to be looking at stuff and you're going to be thinking about, well, wait a minute, you said earlier if it goes and it does this thing where maybe it breaks out too early and then goes high, it has to come back down. Well, lo and behold, that's exactly kind of what happened here, right? And so this is kind of the main one I'm looking at right now, because this is where we last broke on our sine wave. Remember I said it didn't form that 50%, it just kind of went above it, and then it came too high, and then you have to come way back down later, it takes too long. Well, this is kind of where we are now, and you can see that it's actually below it. So there's a bit of a problem here, which is that, hey, it hasn't even really gathered support yet. It's definitely trying to. You can see it kind of bounced along it here, but it hasn't really held this as support. So during this an early breakout, we really need it to come back above 832. Like, that's, to me, like a really important part of this. Maybe like 830. If I look at where that is in the scheme of things, it needs to make sense. And I have to ask myself, does it make sense that this would need to come back above 830? The answer is a resounding yes. Nothing about this is accidental, right? And if you go back and you look, and I'll highlight this, it's pretty obvious to see why, right? You can see that this was a really, really strong supply line up until when? Like, pretty much we distributed until here on October 5th. So by plunging us beneath this supply line, right, you're basically endangering the bullish thesis. So the idea of coming above this is very, very critical. So it makes sense because this correlates to that sine wave cross. So why didn't we check this on the way up? Why did we rush through this? And I kept saying, like, I didn't like that it rushed through it. Well, here's why, because their intention was to come up high and redistribute to come back down and get this lower liquidity, period. Why did you think that could even happen, Booksy? Because of that, right? And then ultimately, yes, we saw a head and shoulders set up. That makes it pretty easy as well to sort of see that there's a potential downside. Now, other people saw this for other reasons, and it's not that this is the end-all be-all, but it does work. Does that make sense? So even if I'm like not 100% about something, eventually it tends to work itself out. And even if you're not like, this isn't enough information, because, man, this could just come over here and drop way later and be really low, or this could drop early and blah, blah. Right, it's not enough information. It doesn't really give you a sense of timing, okay? But right now, what we know is there's a potential for us to come up and gap fill. That could meet either of these two upward trends. So I think there's a strong potential there that you end up coming up and meeting one of these two creek lines, right? I think there's this idea that this is going to be a problem later or some kind of importance later. I think that's a guarantee of some kind, right? But I don't think that it's necessarily giving me any real sense of timing just yet. This more so just gives me a sense of, all right, well, somewhere along the line, if we come back up in this sine wave, we're probably going to hit one of these tops. A lot of people want to hit 13. So I might go to 13 and I might say, well, 13 was definitely a target that bulls were looking at. When does this particular thing intersect 13? Well, it's not for a little while, If this ends up being that main trend, then it's not until mid-December where this could hit potentially 13. This allows you to start building out, though. This allows me anyway to start building out ideas, because I know like this has to take a couple weeks, and then you can start seeing things like this, right? And how, okay, if it were to rebound here and find support, this would be probably how it could happen. You know what I mean? Pretty simple. Then I can start, testing other things, start looking at whether this particular target makes sense. Are there other trends that kind of indicate this is maybe how we go? I don't know. I mean, this one looks pretty strong to me, to be honest, because of this. I can see the work across here. I can see that breakout and the holding of support on this particular trend. To me, it did it like twice. You can see it happened here as well. Yeah, I mean, this is a decent one. I don't think it's the end-all be-all again, but it's a good one. We also have this concept of like, well, we're widening, and this is where we get into more basic, and it's not bad, it's just basic. This is where we get into more basic stuff. We don't have to talk about sine waves nonstop. But this is where we can talk about things like, hey, well, I think that, this so far looks pretty good, and we've got this downward motion. Maybe it's going to do something like this, repeat itself, and we can get a push up. Some people are going to disagree and they're going to say, well, man, I think it's going to go down first. You might be right. We haven't gotten there yet, but absolutely it's possible this thing could go down first and go for like a lower spring or something like that. And it looks a lot like that 2020 fractal, right? We talked about that a little bit yesterday in the stream. Absolutely, that's a possibility. We don't know exactly how this range is formed yet. Just you can assume stuff, but you don't know for sure, okay? So the other thing I would look at is then, does this make a lot of sense on the bigger picture? Are there any other trends? I'm not really seeing anything right this second that looks like it would go that way. This might be the best one right here. You can see there's an early, very, very early uptrend that's formed with a couple of wicks here, and it seems to suggest, and this is where I might do like a fractal comparison. You can see it looks strong here as well. These were kind of up thrust above it and then a final push up before it slid down. It seems to suggest this could end up being a very important trend for us. All right. But does it line up with the other? No. Now there's a number of things you could do. You could say, well, maybe 13 is not the right number. Maybe it's going to come higher. Maybe it's where these intersect. Maybe. Because we know that the market doesn't joke around. Like algorithms don't joke around with stuff like this. Once we hit, if we were to come up, this isn't hypothetical for me. The hypothetical is the if we come up, but not what will happen when we come up. When we come up, without doubt in my brain, because it never fails, there will be a really important creek that this basically has come back to retest, right? And that would basically be like this. So you'd accumulate here and you'd push up, and this would end up being kind of a cross section. This could end up being a giant widening, right? So it's definitely a possibility that up into December, this comes up high. You get some kind of a distribution, and then early in the year, you're coming down low. And at this point, price targets for breakdowns are back to the beginning. So this would give you an indication that, yeah, you come down low, potentially very low, right? I'm doing this on purpose. I know it looks weird, but basically you're coming back down to where you started. And this could give you that lower liquidity. Where have we seen this before? Well, go look at February, for example. Like that's one where you had a widening where it basically broke down. It looked like it was going to bleed out, had a change of character, and then it went on. Okay, so these are things that I'm looking at when I think about how this could happen. And in terms of like a breakdown, well, a hook is a hook, right? I think if there's a bigger reaction to the upside, that might be one of those situations where it's more or less like just doing it to distribute again. And I know that kind of bums a lot of people out, but frankly, like I'd be more suspicious of a bigger reaction now up to 10 than I would of like a lower reaction that then accumulates, right? Because a bigger reaction up to 10 could indicate that some bulls got trapped and they just really want to bring the price back up to sell, right? And get out of their positions. And if that happens, then you're in trouble, because this could end up just being like a distributive action to redistribute back up here in an area that we see has higher liquidity, like from 950 up to about 10. So that's a difficult read, right? But if that happens, then okay, remember that was where that creek was. There's still a strong possibility that is distribution, right? So this is how you can kind of like keep your wits about you when you're trading, because you know that like, look, at this point, if this forms a bottom, no matter what happens, what's most likely probability-wise is 910. So is that a good trade? $1? Yeah. So if there is a reaction here that starts breaking these little micro creeks and going up, you do have a pretty big space. It's not a guarantee. We also know we can look at stuff like RSI. We can see on the 30-minute, it's oversold. What about the 1 hour? It's oversold. Those are things that could really help you determine, like, yeah, there's a pretty strong chance that this is going to come back up in the near future. Not a guarantee, but a strong chance. And at the very least, that you get a bounce. Where is the bounce target? We kind of have a strong idea. I mean, and like I said, you could have done this by just looking at the levels that are formed out, and that's what I did this morning when people said, well, where do you think it could go? And I said, I think it's forming a range between low 8s and 910. Like, that's probably where the range is going to form. This is why. Okay? But there's more to it. So when I look at this, I think about this as more of a distributive action, potentially. Now, some might say that, hey, you do say that, and that could be the case if it ends up being like that 2020 where it comes up, redistributes, and drops back down, and then forms a lower range, and then breaks out later. But isn't there like an infinite number of possibilities? Couldn't this still go to the upside? Well, yeah. I mean, and this is where you can only go so far. I mean, TA is great, it is. But if this for some reason forms support here, then yeah, absolutely, this could just break straight up to the upside. Where have we seen something like this? The August run, for example, where it came back down for low liquidity and then it broke out to the top and redistributed. This could still be a distribution, you know? It could be a distribution that's coming much higher, right, than the previous. And we can look at these things, and faster, I mean, than the previous. We can look at these things and guess. Frankly, like, until things kind of work themselves out, a lot of this is basically just estimation on timing, right? What I think is most likely, based on how oversold we are, is that we're going to get a pop. If the pop stops low, and that's our automatic reaction, and it's pretty low, it doesn't come too high, it doesn't fill the gap, then I think we're going to have a longer range. That's my estimation. If the gap is filled, then I think you're going to either have a strong distribution, right, which could still catch low and form a giant range, I guess. But again, based on liquidity, it's kind of like, why do you need to do that? You wouldn't really need to do that. We'd have to watch what? Well, we'd have to watch supports, because this could still find support on the cross and then go, right? But in the whole, if it came up early, I'd be a little more skeptical. And I would definitely either want to see this for the upside or see this for the downside. I would trade from there, right? From here, after that push, okay? That's it. Like, that's as far as I would want to go with it. I wouldn't want to think about whether or not it's going to go up or really low, because I don't know yet. It's that simple. I think that the next action is usually the best action to trade if you're going to trade short term. Long term, if I'm thinking it's going to get to 13, I've got a pretty big window here. I think you can look at this as December 19th as a possibility, but if this were to distribute and come down low, then you have to kind of reevaluate, right? Because then if it's like, oh, well, it did break down and it did go low first, okay, well, how long does this take? It depends. I mean, if we get this distribution, then you have a new arc here, right? And again, it's not complicated. It's really simple. If this breaks down, now this is your outer creek. So when is the longest it takes? Well, assuming that this actually breaks to the upside, it could be January, right? And you could be waiting for a really long time before you get that push back up. So now you have like a window. We could talk about trajectory in, trajectory out, but now you have a window of like possible time. And it's a pretty big window, you know? So is it a good trade? I don't know, you know? And there's going to be a billion different examples of what could happen. I'm trying to show you that the way things are built out is the way that I try to interpret it. So the way it's built out on the sine waves and the horizontals is usually the most important thing for me. The fractals are just examples of how this has played out in the past. They do not indicate that it's going to happen again in the future. They just don't. But they do show you that there are different ways that institutional money can push and trade a stock. There are different ways that we've seen the same pattern, right, break back to the upside or break back to the downside. Okay? So all of these things are pretty important. And again, what I just showed you is kind of like, I'm looking at big picture possibility, but ultimately like what has happened in the daily time frame is that it hasn't yet broken out. So as much as I'd like to say, yeah, it's going to go, you know, we're waiting and we're not really seeing anything just yet. I see a mild divergence on the 6 minute. If this makes the same bottom or roughly the same bottom, that's a pretty strong divergence, probably goes up to the 15 to 30 minute. That doesn't mean that you're going to turn around. It just shows you that, yeah, we came back down to the same low, but the RSI is higher. That's, again, a sign that there might be a turn. 30 minute has it as well. 1 hour has it really mild, but again, 1 hour is maintained being oversold. When you get up to like 2 to 4 hours though, my guess is this isn't going to exist. It just looks like, well, if you had a reaction back up, it would probably just be to go test that moving average. And I would assume that if we did have a reaction back up right now, more than likely, as soon as this hits that auto reaction high, it's going to be meeting up. The RSI is going to be meeting up with the moving average on like the 4 hour, for example. When you get to something like the daily and the weekly, it's a little different. At this point, I might want to start looking at trends and say, well, there is a low trend here and it's getting really close to it. That might be a place where we find kind of a refuge of a bounce. Weekly, it just looks like it rejected, and weekly is really different than the rest. It just rejected off of that moving average on the on the weekly, and it looks to me like it's kind of a widening, and unfortunately that could mean that this is like a longer term breakdown, or at least it's going to break down and come back to being oversold, right? Could it still come up again during that auto reaction and retest? Absolutely. There's space for that. It makes sense. And then we go down to the monthly, and I don't even think it's oversold yet. Like, we're not even close to being oversold. And the last time we were oversold was March of 2020. If your argument is just, hey, the powers that be really want it to be here as in terms of a buy signal, yeah, I think this is where you're getting a lot of those low targets. Do I think it's necessary that happens? I don't know. You can see that when we took off here in the January run, we were really at 34. I mean, there was an RSI divergence for quite a long time on the monthly, which is a big deal. We don't have that right now, so that doesn't really help. That's just one indicator, right, of many, and there's dozens and dozens of them. So again, when I look at something like this and I'm thinking about whether or not I want to trade this, I'm going to be looking at those things. I'm thinking about the big picture of like, well, I don't think it necessarily runs to the moon right this second. I don't think it's set up for that because of higher time frames. It seems like there's plenty of space for exploration here. On lower time frames, it does seem like it's warranting a bounce. And now we can see that it did hop this little creek that I drew earlier, found support, at least for a moment. So what we might want to do is, again, kind of look at the next one. And this is tedious, but this is basically how you can easily gauge a breakout. And there's other things I would look at as well. On the 1 minute, for example, I might look at, if I'm looking really, really close, I'm probably going to be looking at the same things that we're talking about, but on the smaller scale, right? I might look at this guy and say, well, that's kind of a dominant trend right here. Seems like it's pretty strong. Seems like it doesn't want to break. So this might be a good place to consider like a buy order if it breaks out of here, because this right now is the dominant action today. Is there like a wedge or something forming? Maybe. It's kind of early, hard to tell. This isn't a really strong wedging formation, and it definitely looks like something that could still slide down. There's a lot of selling going on today, a lot more than yesterday. That buying yesterday looks pretty light, looks a little bit more like an LSPY, where it just kind of chopped up in a bull flag and then dropped. So we got to wait it out, because right now this looks like it could be like a halfway point. It hasn't really decided it's going to go up yet. When I look at whether or not it's crossed the major thing we were talking about earlier about 8:30, it hasn't. So it's really just been chewing down to get to lower lows. We are sitting on 8 right now, 801. We know that's pretty important. We know there's a trend right here. We know this is low liquidity. Maybe it takes some time to trade this before making a decision today. If it does break to the upside, there's a number of ways you can get a target for a falling wedge. The Bukowski method usually gives you like the same thing that you get here anyways. It's pretty similar. So if it were to break, and I'm going to guess maybe around here, because again, this is a previous support. So maybe around here, that breakout doesn't necessarily give you, it says 26 cents. So just an estimation. It kind of gives you an idea of like, well, maybe, right? If we saw a break here and then it came across, I think you could maybe expect to see it come back up. If you look at that value, it starts becoming apparent that maybe I'm using the word maybe a lot because I don't know, but this is how I like structure it in my head, right? When I'm thinking about things, I'm thinking about, does that distance make sense? Yeah, I think it makes sense here as well, because this leads you back up to near the gap. It doesn't give away the range just yet because it's more of an auto reaction back up to this previous top here at 838. It does get you above, right, the liquid center here, and gives you time as well. So am I saying that's exactly what's going to happen? No, not necessarily, right? It's just an idea, okay? And it does look right. So if it did break out here, I think this would be a pretty strong target. If we got above 811, I think we get all the way up to 838. So what I would say in the Discord is that I would say, yeah, I think if we break above 811, we're probably going to get to 838. Okay. And if that happens, everybody's like, whoa, what? Well, it's just a matter of traveling from one breakout to the next potential resistance. It's not that complicated, right? But you have to have the setup for it. And obviously, you know, this isn't even done yet. Let's say that does happen. Excuse me. Then I start wondering about other things like, well, does this go backwards farther? And it does. So suddenly it's like, oh, this is a much larger schematic. There's an M here. There's a lower M here. Oh, no, that's probably iterative, right? So then you have to look at, okay, if that breakout were to occur, what am I dealing with next, right? So now I'm dealing with maybe even a larger setup on this wedge, right? And I'm going to have to deal with a lot more. So these are things that they can be a little bit annoying, you know, but you could see how like, oh, that kind of lines up with the gap, you know, coming back to this particular top. Do you think that's an accident? I don't think it is. Do I think it has to hit it right now? No, I don't. I think if this bleeds down, all this goes out the window, right? If this continues to break down, then you may not see this come back up. But if it does come back up, this seems like a very likely target. And then you have to deal with, okay, you've got this falling M, you've got this falling M. Is this going to be another one, right? And is the goal here to just kind of get this as low as possible? And when do we decide that this is not bearish anymore? It could be Monday, right? I mean, you can see like if this were to go sideways today around $8, max pain numbers tend to be rounded numbers. But if this went sideways today, guess what? This intersects this 801 right at the end of the day, you know? And it's possible that we form a bottom here that actually is bullish. Maybe it gets a higher low on the second M and we go into $8 by the end of the day. Okay, well, that's different than what happened here, right? What happened here is that the second M dropped lower and the second M here dropped lower. So if it changes character by the end of the day, that could be an indication that this is going to go up Monday, right? It's going to do its thing on Monday. You know, does it make sense to sort of end the day at 8? Maybe. You know, I think that price target right there seems logical to me, that you would have this reaction and then come back down and then coast down into 8 by the end of the day. Isn't out of the ballpark, you know. Is there another possibility? What if it breaks up, Booksy? What if it goes higher? I mean, you talked about M's and the hooks and stuff. What if this is where it ends up being, right? That there's a hook here and you end up coming up, finding support and pushing high. Well, okay, but at that point, you're outside of this other creek, and I think that at that point, you're looking at the same kind of issue, like, is it going to make another lower M? Could it still come back down? Well, yeah, I mean, look at the liquidity that hasn't been traded here. Does that make sense? Sure. You see how there's like a dozen possibilities, but each one of these is a little different. One of them presents itself potentially as much more bullish, being on top of this trend versus the other, you know? And that's where I think you have to sort of weigh the options, so to speak. I do think right now this drop being a gap with this M falling M, this drop being a gap with this falling M, this looks iterative, and it is iterative downward, meaning it looks like a repetition of pattern. So could it happen again? Sure. It would be very steep if it happens again. But I think once it starts breaking, then we're going to start seeing, you know, how is breaking. So if it breaks like this on the lower time frame, right, and it comes back above, Well, we know this pushed up against the gap, pressed through it, comes back down along the creek. So the next time could be very similar, right? You could see this push back up, stop along the gap, and then go up, and then come back down along the creek. Well, guess what? Does this add up? Sure it does. It's the same setup, basically. It's almost identical. So could this be the way that we see that auto reaction? Like, this is the auto reaction. It looks random and just kind of like it's going up to fill the gap. Sure. Does it make sense with the creeks that are available? Sure. Does it also put you above this outer creek? Sure. Like, all of those things seem to line up. Doesn't mean it's going to happen that way, but it absolutely could happen that way. If this is your auto reaction, guess what? We're in danger because this is really, really high. But at the very least, we know that, hey, there's some possibilities here, and it doesn't have to end badly, right? Just because this is a major reaction doesn't mean that this is over. This could still come down, cross over again, have a reaction up, and end up being like a pretty decent, range, right, before you leave. We don't know yet. There's not enough information yet. But this is the way that it could happen, or it could be a breakdown, right, where you end up coming down below the range. Maybe there's a automatic reaction later, or there's a push up later that just goes high again, and then it distributes. And this is the kind of stuff that we can't really tell right off the bat. But I do think that, at least for now, like, does this make sense to me? Yeah. I think coming across the local creeks, maybe even ending the day around 8, pushing up Monday in a bigger auto reaction to go up, fill these two gaps, or fill the second gap, if we see that happen today, would make sense. Right now, what's happening though, right? And this is like, I know I'm going really long on this video, but I wanted to do it more educationally, just so you could see my thoughts. What's happening right now is we're still bleeding down. So we haven't actually left, as far as I can tell, and I can go in as far as I can on my chart, I don't think we've actually left, right, these major downward actions just yet. So there's nothing just yet that indicates we're still not in this bleed out. Remember, this is the big drop after the M. It looks like we got another big drop after the M. So my guess is that this is still iterating downward, right? RSI is still divergent, but that it hasn't changed direction just yet. So now I'm kind of looking at it again, big picture. We got the drop reaction. Are we doing another M right here? Is it really small? Is it still going down? And the answer is yes. It's still making lower lows. It hasn't changed character just yet. Once this changes character, if it does, it starts breaking back out, we can talk about upside with more confidence. But right now it has not. It just keeps going down. And now it's testing, this particular trend. It's pushing beneath it. So it's not looking great, It's looking like it wants to continue downward more. Everything can change on the, the flip of a switch. I mean, as soon as buyers start buying, this suddenly becomes like really bullish because you start hopping these local creeks very quickly. And this is why when we talk about beaks and stuff, I always talk about like beaks. Those are pretty powerful reactions once you get to the bottom, but it's a very difficult buy. Like, because you're basically chasing what we would call like a falling knife. There's no real way of knowing. This could easily just start going straight down, right? And this could be a massive like 50% marker for an S-curve. And all that work that we just did doesn't really matter that much if that ends up being the case, So that's part of, I don't know, life. And it just the way that it is. If this continues to make lower lows, then it's continuing to iterate down. It's basically going until it looks like they're going until it's exhausted, but I don't see a huge amount of seller exhaustion just yet. This might indicate a little bit of that, like it's not becoming oversold as quickly, or it's maintaining rather RSI divergence, I should say. I think, yeah, there it goes. There's that bleed out. I think that you need to have like a big reaction from buyers, right? And unless you get that, then this looks like a breakdown. So for now, you know, a lot of the work that we just did, you guys are like, well, that sucks. You know, did all that work and now it's not really looking right. Well, we don't know. I mean, anything can happen, right? Is this a big sell? Yeah. 1, 2, 3 big sells. Is this iterative downward? Yeah. Is it still doing the same thing? Yeah. But as soon as it turns around, right? And of course, we know it's getting more and more and more. So I think that's actually the side, not the other one. It's getting more and more and more steep as it goes. As soon as it turns around, this changes quite a bit, right? It will have a pretty strong reaction, but it's not there yet. Right now, it just looks like it's bleeding down. Sellers are dumping on it. And so therefore, you have to just kind of look at the big picture and say, all right, well, if it doesn't set up a range here, what does that mean? You know, is this an absolute bottom, right? Is it going to go way, way low? Big questions. I don't know the answers to every question. I think that when I look at this and I see the way this set up, yeah, it basically set up where this is like a 50-50 drop back down, and then it did the same thing again. And this time it had a change where it came up higher on the second push, and it failed to kind of continue downward, and it reversed. So we're really looking for that kind of predominant price action. Right now, it looks like sellers are dumping on it. RSI maintains that divergence, but we can look at potentially like where's that 50-50. We can start seeing it from like a bigger picture. You know, are we destined to have like a huge bleed? I mean, it's a tough one. You know, it's tough. I think you got to kind of just take it for what it is. Potentially, the downside here is pretty low. I mean, it's 750. That's real low. I know somebody in the Discord said that, something like that. That would be basically us coming back down, as far as we can tell, at about right here. You know, maybe this previous level. I think it's possible, you know, low liquidity. If you look at the bigger picture, and you look at a possible 50-50 S-curve, it's ugly, you know. 50-50 S-curve comes very, very low. We're talking about like 680s. So unless this has like a major change and has that strong reaction, which again, I think is possible because of what we're seeing on lower time frames all the way up to about an hour, you've still got moderate divergence. An hour looks like it's just double bottom now. So it may change in the very near future. But at least 30 minutes backwards, you still got a strong chance that this, if it can move, will curl up and break out and have a decent reaction to the upside, which would chill out. I mean, this would probably end up being overbought pretty quick. You know, it would chill out a lot of these other indicators on the lower time frame. Unless that happens, and you get that reaction today or into Monday, it does look like there's low targets here. You know, we haven't reclaimed this major downtrend. Like, it's just running away from it right now. It's rejecting away from it. So this is a way for me to understand the stock movement. I don't need to be right about everything. I just kind of got to watch it. It's part of the reason why I said 6 was even possible, because I know that people had these crazy targets for other reasons, and hedge funds had these really low targets as well. And you have to look at those and you have to take them seriously. But a lot of it just had to do with, well, the setup. I mean, if the setup breaks here and here and here, you're going to go down low. I mean, it's that simple, you know. There's reasons why you would expect pullbacks in certain areas. I still think personally that this reaction right here would be warranted. So I still think that we're in a situation where I don't think it's necessarily dropping all the way right now. I think bears get trapped just as much as bulls. So if there's this kind of enticement like, hey, bears, jump in, grab your puts, sometimes it pays off, you know, and other times there's a harsh reversal and they get squeezed out. And right now, if you want to squeeze the shorts, all you got to do is look at the volume. You know, early volume today indicates that if you can get it back above roughly 843, 845, all those shorts that are here are basically trapped. So a massive candle up to 845 would be a breakout of a lot of these things. Like we were just talking about it. It would push up, find a moderate support here, and then go. Well, that's partly why that works so well, is because there's a huge amount of shorts that dumped on it right here to get the price lower. That also tells you that, hey, if you come back to that level later, you might have shorts covering. Is that going to happen? I don't know. All I know is that that's the way that I would read it if it were to occur. Okay. For now, it just looks like it's melting down because it hasn't found any support yet. It's struggling. I don't see buyers stepping in. As soon as they do, if they do today, and they get it back above 8 and they find some support here, I would definitely expect to see 840, 848. From there, I don't know if it's going to come back down the rest of the day to meet us back at the bottom at 8 again, or if it breaks out and it goes high, has a decent reaction, then comes back down. We could still end up being like an 850 kind of day, something like that. I'll do a recap that's shorter at the end of the day. This is a longer video. I wanted to do this to just have a more educational video out there for folks that want to see what my thought process is, how I build this out. Ultimately, I wouldn't be saying this is a breakout until what? Well, until we start seeing these kind of creeks jump again. So these are those purple lines coming down, and that has to do with how bottoms form out on AMC. And there's a lot of space here, y'all. This is space up until Monday. So there's a huge amount of space between here and Monday to stay around $8. Doesn't mean you will, but there's space, and it means that could happen pretty easily. There's also plenty of room to the downside. If it starts losing this 790 area, maybe it hooks and comes up and hits 8 and then rejects hard, you could see a massive sell-off, right, to come down to like 739. So those are kind of like the price targets I'm looking at right now, and how I would maybe enter exit trades based on whether it's jumping or rejecting on some of these creeks. I hope you guys enjoyed it. I know it was long, but this was something that was requested, and so I thought it'd be a good idea to kind of walk through my thought process on it, how I build out a chart, why these lines, even though I know that I get criticized a lot for how many lines I have. These lines are not arbitrary to me. They're each one is indicative of a potential support or resistance based on whether it's a creek or a horizontal level, and it's all based on kind of sine wave analysis. It may seem like a lot to try to keep up with at times, but when you do it yourself and you make these charts yourself, it's easy to kind of remember what you're looking for, right? Like I know the gaps here. I know that correlates to this kind of major hook value. I know that that's an iterative move because it's smaller than the last one. I know that the breakout of that, if it holds, would then probably produce a secondary move that kind of finishes this one. I could do those comparisons when that happens. I know that none of that happens if we don't get through the more basic breakdowns here, or breakouts here. I know that the lower time frames, RSI is divergent, pretty strong divergence still, but the higher time frames, it has plenty of room. You could still see a bleed out. I know that sellers thus far have been pretty dominant, but I also know that they're probably in big trouble if buyers bring it back above 845. And if they don't, then sellers are just dominant. Like, it's that simple. I know that there's been a lot heavier buying in this area maybe than expected, but I also think that sellers are definitely like pushing it, as low as they can go. And we'll see. We'll see if it ends up being a bear trap. Again, lower time frames indicate it might be. Higher time frames, it's kind of open air, right? We haven't seen any serious breakouts of these iterations. So thus far, it's maintaining its bearish status. And I think that's why bears are still dumping on it right now, because it hasn't crossed any of these yet. And when it does the cross, it's just kind of like barely crossing them. And then you're kind of seeing a drop again. So I don't think at this point in time that there's any reason to be overly bullish until you see these creeks start breaking back up. It still looks like it's parabolic down, right? And it's having a really hard time kind of holding on to trends. So it's definitely losing them in a way that to me shows like buyer weakness, or at least that buyers are not buying yet. I don't think it's necessarily over till it's over, but it's also something that, hey, as this goes down, you have to kind of keep making those adjustments and saying, well, where is it actually finding support? If it's not finding support on the way down, it's just going to keep breaking, So that's all I got for you. Hope you guys have a great Friday. I'll try to do a recap video on the week. Thank you all for tuning in, and we'll talk to you later.